What's up guys, it's Michael Katz here from MIKI'S Stocks, bringing you another weekly review with all the information you need in order to trade properly this week, March 14. Let's begin. When looking at the economic calendar this week, we can see that the most important and relevant day for this week will be Wednesday, FOMC statement at around 1 p.m. Eastern Time, and on 1:30 press conference of Jerome Powell, the Federal Reserve Chairman. At this time, make sure you're not entering any new position. Wait until you get the full result of the FOMC and then decide on the trade. So this week, like always, we are going to analyze the Nasdaq, the S&P, and today I want to add the RTY, Russell 2000. So let's start with the S&P 500. Last week we analyzed it in a 1A chart, meaning every bar represents 1 hour of trading, and as you can see, I always keep my drawing so you can see what we talked about last week and 2 weeks ago and so on. So a week ago exactly, we marked the head and shoulder formation. We had the left shoulder, then the head, and we waited to see the right shoulder. We got it. We said that if the price will break through the level of 38.50, we should see a continuation to the upside, and this is exactly what we got. And we saw the same on the Nasdaq. We marked the left shoulder, then the head, and we waited for the right shoulder. Here you can see that the Nasdaq went just a little bit lower than that and then broke through the level that we talked about and went all the way up about 300 points. The Russell 2000 did the same. On a 1A chart, you can see a beautiful head and shoulder pattern, left shoulder, head, and then the right shoulder. The Russell was definitely the one who pushed the market up, breaking through this alligator mouth all the way to a new high. This week, analyzing the S&P 500 on a 4-hour chart, you can see that we broke through the resistance level and retested as support, and right now we are looking pretty good to the upside, again at least to break through this high and maybe going even further all the way to the resistance level of the channel that we traded in a few months ago. Looking at the Nasdaq, you can see on a 4-hour chart again that is much weaker than what we saw from the S&P and the Russell 2000. So remember that, because the move to the upside should be much slower, and if we will see a downtrend going on maybe on Wednesday after the FOMC, it should be much stronger for the Nasdaq compared to the S&P and the Russell 2000. Lots of money going out of the technology stocks and going to the S&P and the Russell, so make sure you follow the smart money. Now, before we will continue to the hot stocks this week, I want you to check out the VIX, the volatility index on a 4-hour chart. For those of you who don't know, the VIX is going the opposite direction of what we see in the market. So when the price of the S&P going up, the VIX is going down and so on. And this is why we want to analyze it to see where the VIX should stop and basically where is the support and resistance on it. So as you can see, we broke this support level and will probably continue all the way down to close this gap at 2160. This should give the market enough air to continue higher, and I'm still waiting for this scenario to occur. If we'll break the 2160 and break the 2088, the lowest low of this period, then we might continue all the way to the 1850, the resistance level of the channel that will become support, and from that point we should see the market dropping. So just look at the VIX and wait until it reaches support level, either the 2160 and then the major one at 1850. Last week we had two hot stocks. The first one, FIZZ, broke through the level that we wanted, 55.70, got us in, and right now we're still waiting for it to move higher. As you can see, it dropped a little bit, but our stop loss is at 47, still waiting for FIZZ to move higher. The second one, working amazing, AMCX, broke through the level of the flag at 72.15, and on Friday reached almost $6.50 in profit. Still waiting for it to go all the way up to the 80, looking pretty good. Let's go to the hot stocks of this week. Our first stock for this week is INO from the pharmaceutical. It was one of the biggest competition for vaccine for the coronavirus, and as you can see, it hammered after Moderna and Pfizer got their vaccines approved. But this week, after reaching a major support level for the last few months, it might give us a nice momentum move to the upside, maybe even going all the way up to closing this gap. I really like the continuation pattern it made Friday and Thursday. Those two candles called side by side and usually indicates on an uptrend if crossing the high of the candle, meaning 10.60. So if we'll see that, we can go all the way in, probably going all the way up to close the first gap at 11.60, then continue to 12.90. Our second stock for this week is a bit risky, CLR. It looks pretty good to the upside above 31.20, but as you can see, I drew a line at 33.16 because this is a major resistance level from the past. It was support, acted as resistance, again support. So this can definitely be a level that will create troubles going up again. But if we'll break through the level of 33.15, then we'll have enough room to go all the way up to the 36, and this will bring us the take profit that we like. Again, like always guys, if you like the analysis and the trades that I'm giving you, just subscribe to the YouTube channel to see more, like it, and make sure you share it with your friends. Have a great trading week. We'll be in touch shortly. Bye bye.